Hey guys, welcome back to Sharks Academy, and in today's video, I want to share with you the weekly market analysis moving into next week. And before we do that, please watch the video on market structures, alignment, and confirmations, because these are the few factors that helps you to be better at trading every single day. Okay, and for those who have been following us for a while now, you understand that we have our own basic mentorship package. So yes, you'll be receiving, a student group, tutorial videos, trading system whatsoever, and then of course webinars, right? So this is really common with most of the academies out there. So what is the real difference is that you get personal touch with the mentors very often. Every single day you can have personal touch with the mentors, right? We'll do a monthly check-in, we can even do a weekly check-in. All right, so it's not so much about a strict curriculum where you can only meet the mentors once a month or whatsoever. Take into account that we are a growing academy, right? We have lesser students, of course, compared to people, right? And that's why you get more one-to-one time with your mentors. All right, and I hope that is a selling point for some of you or for those avid followers who have been with us for a long time. All right, so similarly, first month you'll be undergoing a very strict curriculum, right? You watch videos if you are new. Okay, you will clarify as much questions as you have. Second month, backtest, attend webinars, refresher courses, and all of those stuff. And the third month would be executing live entries. So yes, we have turned profitable traders, right, who have been struggling for a while. Let us start off with dollar index, and you understand that on the weekly time frame we have this supply as mentioned previously, right? And we expect a bounce over here, and indeed it gave us a bounce. Okay, this so-called retracement over here on the daily time frame is a huge bullish move, right, on the euro dollar. So let's go and take a look. All right, this, can you see that it's just negatively correlated? So truly you could have caught buy positions, and that's what we did over here. This rally here, this is where we caught buys, right, when DXY was experiencing the bounce on the daily time frame like this over here. Okay, ever since prices taps into this, we were short-term bullish for euro dollar, and that's how we actually use this correlation. All right, and let's just move on to DXY again. On the weekly time frame, we are expecting a deeper mitigation. All right, can you see that on the daily time frame you have this last doji candle over here, right? This over here hasn't been mitigated, and perhaps prices can make it move up, liquidate this before potentially distributing towards the downside. This is possible. Otherwise, if this supply fails, then we expect a deeper move into this supply area, of course, right? Liquidating all of these big highs, okay, into this area before potentially distributing again. So with that, we'll move on to euro. So over here we have euro dollar, and before we actually move into the projections, let me just go through some of the, I'll say, technical analysis portion I did with my students. So can you see that this, we sweep liquidity, we make this move down, right? We sweep liquidity, we broke structure again. This over here may seem like a very small move, right? But on the lower time frame, this was huge, right? Can you see that on the 15 minutes time frame, we have this buy to sell, right? We have a H4 boss here, right? H4 break, okay? It came back up into this supply zone, right? This is a buy to sell wick, and what is so powerful about this buy to sell wick? It's a flip zone. Can you see that this is a demand? This is a demand. Okay, prices broke towards the upside. Okay, what is this demand supposed to do for you? This demand should create a higher high, right, and continue the bullish move if it wanted to, but it failed to do so. And can you see this is a reaction? We tapped in, we reacted. This is a buy to sell wick, broke down. Now this becomes a supply that caused demand to fail. Okay, so now prices taps into this area and gave us a change of character. So can you see that traders, or I would say the amateurs, are looking to sell at the moment prices taps into this area? Not wrong, right? As a 15-minute trader, you could have done that, right? You could have just wait for this and place a maybe stop loss above this high and aim for lows like this for 1:6. But this is very risky because yes, you have a valid POI here, but you didn't validate this structure. This is just sell limit orders. What you want to do is you want to wait for the 15M to be aligned with whatever market structure that you have done. So if you haven't, please go and watch market alignment, right? Market structures, the latest video that I've posted. Okay, this is basically the zone or the range that you want to play with, right? We broke towards the downside. This is the supply. What I want to do is to align my time frames. I want to align this movement over here, because over here, yes, it's bullish. Can you see? It changed character towards the upside. This is now bullish. I need to wait for another change of character to the downside. And clearly it did over here. Can you see? This is a change of character on the 15M. So now, my immediate movement over here is bearish on the 15M. And this made me move to the lower time frame. So let's go down to the lower time frame. Can you see that this is a 15 minutes buy to sell again? Yeah. Okay. Buy to sell on the 15M after it changed character, right? This is a valid supply. So by placing a sell limit over here, you are essentially doing the same thing as what you are doing over here, right? Because you didn't validate this structure. You are supposed to place your stop loss above the high because you validated this high when it changed character here, but you didn't validate the supply zone. Right? And it's ridiculous to place your stop loss as a 38 pips on $, right? Remove that. Let's go down to the lower time frame. This is a valid supply. Let's go down to the lower time frame and play with the lower time frame market structure. So now prices taps in, grabs highs. Can you see this is a sweep that we broke down? At this point of time, we are valid for sells. Okay, so I have two POIs over here and here. Right, didn't get tagged in. It's fine. Prices started to deliver bearishly again. Right, now we broke lower. This is a supply. Okay, so typically, if you are trading on the 1M framework, this could have been your entry. Alright, target this low as your TP1, and of course TP2 would be this low over here. Okay, this is the 1M entry model. But if you are planning to play with the lower time frame confirmations, this is how you do it. Right? We make its move up, we tap into the entire buy to sell range. Okay, I think this is a 5 minutes or something. Let me just go and take a look. So you have to make sure that you mitigate something. Alright, can you see this? You mitigate a buy to sell. Okay, so let's go down to the lower time frame again and look at this. Since prices mitigate the entire movement over here, this is a validated high. Right, broke towards the downside, came back up to this supply zone. Play the 5 seconds. Okay, let's go and see the 5 seconds. Alright, take a look at this. Highs, lows, highs. Change of character over here. So the truth is that you could have gotten involved here. Okay, buy to sell. Can you see? It's the same thing. You're going to see this same move happening on the higher time frame as well. The 15M, the 4 hours or whatsoever. We have a high, low, high. We have a change of character. We have a supply. This is where you get involved using a 5 seconds time frame. Right, stop loss above the high here. Right, with $, you have small spreads, so you can actually just put maybe 5 points if you want to, 2.7 pips, run towards this low. 1:4 for your TP1. Alright, and then once prices breaks this low, go back up to your 1 minute time frame. Okay, we broke lows again. Can you see? We broke low, we came back, we validated this structure here on the 5 seconds. We broke low again. This is an inside bar. Can you see? So let's go down to the lower time frame and see how can we get involved again on the lower time frame. Take a look at this. Highs, lows, highs. We broke this level. We came back up. As a 5 seconds trade entry model, this is basically your range. It came back up. You can place a sell limit here. Stop loss above the high. Right, and then just aim for TP1 here. 1:2.76 as a 5 seconds entry model trader. But can you see that you are given another entry over here? As prices taps into this supply, what it didn't do? It sweeps the high. Right, it created high, it broke this low. Okay, came back up. The entire buy to sell. Again, follow me. Highs, lows, highs, broke. At this point of time, maybe you have missed this, okay? It broke down. This is the entire supply. Alright, and you want to get involved here. This is not so clean, alright, as compared to this one over here, because this is really straightforward, right? Highs, lows, highs, broke, supply, get involved. And the reason being, right, for placing your stop loss above this high is that this can happen as well. This is of course a valid POI as well, and prices can easily come back up, shift to go lower. So by placing your stop loss here, you have to be prepared for prices to reach higher before going down. So ask yourself, what is your trading plan? Okay, when prices broke this low, the moment prices breaks this low, like this, right over here. You should ask yourself how you want to get involved, right? Are you going to place your sell limit here, stop loss above this high, or are you going to do two positions, right? Are you going to do this, you know, over here and over here? Are you going to do this, or are you going to just take one trade and cover the entire, right? Or are you going to give up on this movement over here and place a sell limit here, right? All of this should come into your head naturally before you even take the trade. As soon as prices breaks this low, that should be the question you want to ask yourself. All right. So now go and ask yourself this another question, right? Which POI is, I would say, valid, right? Both POI are of course valid. Why is this POI valid as well? Not because it's just a buy to sell. Go and look at this. This is the demand. Okay, prices broke towards the high. What is this demand supposed to do? It's supposed to create a higher high. Failed to do so. This is the reaction that broke. Now this becomes a flip zone for you to get involved in the market, right? And that is why this is a valid POI. Okay, so traders can indeed just place a sell limit here, cover the entire buy to sell range. Okay, so I mean, all of these are hindsight, right? And remove all of this over here. Since we know that this trade played out, right? Let's go down to the 1 second time frame to see whether you can catch a cleaner movement. Okay, so now you have this supply zone to play with, and you want to see how prices breaks. Now, can you see that this is way cleaner now on the 1 second instead of the 5 seconds? We push up, we broke down. Immediately, this becomes your buy to sell. Can you see over here? Really precise, okay? It taps in perfectly, all right? On the 1 second, you are exposed to something that is cleaner compared to the 5 seconds movement over here, right? This is not so clean, okay? And that is why markets are fractal. You can always play around the time frames. The lower you get, the lower time frame confirmation you get. How did we get involved in this in the first place? First, understand that this is a 1 minute break of structure. This is a 1 minute supply. We use the 5 seconds to validate the 1 minute play. Now, this becomes a 5 seconds play. We use a 1 second to validate the 5 seconds play. Can you see that it actually staggers down? Right, from 4 hours, we actually made it into a 15 minutes, and made it into a 1 minute, and made it into a 5 seconds, and then made it into a 1 second. This is how you actually use multiple time frame to your advantage. Alright, so enough of all of these tutorials, okay? If you're ever interested, please join us, right? Give us a chance, okay? And let's take a look at where is $Euro now. Right, we made a rally. We have started to deliver bearishly over here. And this should continue to deliver bearishly. We have a supply here now. This is a valid sell. Wait for the 15M change of character to take prices downside into this over here. So over here we have the pound dollar. Okay, I just realized we skipped euro yen and euro pound. Let's just move back there later. We broke this area. So this is a swing structure break. Alright, this is a minor high, I'll say. Okay, so even if prices breaks up, we are not uptrend yet. This is the swing break, okay? So for prices to really turn bullish to potentially move higher, we want to see this breakout, right? So yes, we have a supply here that is valid. If you're looking to take short-term sales, this is a valid supply as well, of course. Okay, so both are valid sales, right? So look at how prices react to these two areas. Okay, honestly speaking, I will just make do without this. This could have been potential inducement for prices to make it move higher before going lower. And it's important to track how H4 is moving into this area. If you start to see this kind of a movement, right, you want to see H4 be in your favor again. You want to see a break. Pull back to go lower. Alright. So this is a PY for pound dollar, and we are looking for sells. So over here, euro yen and euro pound. Okay, we sweep highs and have yet to break down. So I won't be looking for sells just yet. I want to see this getting taken out on the H4. Then now I have H4 pro trend, and I'll wait for pullback into this supply potentially. Alright, so it depends on how prices actually broke this level. Okay, if we react first, then continue breaking down, then now my supply would be here. This will be my supply and my POI. So I want to see how prices break this area before taking sells, and of course, we are reacting off a higher time frame demand, if I'm not wrong. Okay, so this is a demand zone. And yes, prices are delivering bearishly now. and these will continue to deliver bearishly until we see a breakout. Okay, so the range is really tight here. For a breakout over here, you can see you are almost reaching liquidity highs already. So what you can expect is prices to make a high here, break down, so that you can have a better range to get involved to take liquidity highs above here if it decides to go higher. Otherwise, you can play the lower time frame, of course, or you can play the daily. You can wait for prices to accumulate over here, then break out, then take the long into these highs. Okay, this is a possible trade idea as well. So let's say you're going to catch temporary sells, that would be as per mentioned just now, 4 hours. Okay, this over here taps into this wick. Alright, so this made the shift valid. Okay, for prices to shift like this over here, go and find out what did this tap into. That is very important. Okay, if it taps into a POI, then yes, you have a market model now. Right, we can trade the pullback to go sells. Alright, so this is the trade idea for Euro Yen. Next, we have the Euro Pound, and you can see that we are obviously delivering bearishly. Right, we broke structure here, we came back up, we sweep the highs, we tap into an area of POI. Okay, so you can even use this as the supply. Alright, and then prices mitigates perfectly, give you another shift. Okay, so whatever that happened over here, let me just remove all of them. Alright, so now we broke this level as well. Okay, and then this high over here sweeps this area. Okay, so now we have a change of character, we have this over here as a supply. So if I'm looking to sell, right off when market opens, I'm going to look for 15M change of character inside here to go lower. So let's go down to the lower time frame and see how we can play this. Or you can even refine it to this POI here, and maybe the 30 minutes or 1 hour. Okay, so really it's just this 15M. Alright, so what I'm looking for is a 15M change of character. Okay, like this. Breaks down, look for valid POI. If you're a 15M trader, this is your entry model. Okay, please only trade this if you understand what I'm talking about. This again is not financial advice. Alright, so after 15M change of character, we come back down into this area. As a 1M trader, you're going to look for a 1M shift. Pull back, get involved. Alright, and again, also, if you're a 5 seconds trader, then when prices shift over here on the 1M, okay, this is a 15M shift. This is a 1M shift. And inside here, you're going to do the same thing. Alright, if prices does this, shifts, then you're going to get involved here. This is your 5 second shift. Okay, it's a bit messy like this. Okay, 5 second shift. And you're going to get involved here. So this is how you actually scale down the time frame. You're not going to do it the opposite way. You're not going to do all of this, right? Yes, we have a POI here, and then prices comes back up. You go down to the 5 seconds, right, and look for a shift like this. And try to get involved here, because this can happen multiple times. Okay, as soon as prices taps into this entire pin bar, you are going to expect a reaction anyway. You're going to expect this. Okay, I'll just do this. And start to take sells off the 5 seconds. And of course, get stopped out multiple times, like this, like this, like this, before moving lower. So yes, you can be lucky, right, and catch the 5 seconds move that eventually run lower. But all of these losses over here, can you take them? Okay. So remove all of this, and you want to wait for 15M shift, right? You want to wait for 15M to be in your favor. Then start to scale down to the lower time frames to get involved. Next up, we have the pound yen, and over here is the demand zone. So you have 2 ways to do this. Look for sells into this demand, or wait for prices to bounce on this demand to shift to go higher, potentially. So this may be the liquidity point. Alright, and of course, this will be a liquidity point as well. You can see we have both sides, and it's rather ranging currently. Okay, where is our last break of structure? Here. Okay, so technically we should grab top side first. Okay, because these haven't been mitigated, right? I mean, we haven't even liquidated this area just yet, right? And our last break of structure happens here. Okay, so again, equal lows, we have trendline liquidity whatsoever, and that's why we want to see what prices or how prices reacts to our zones, right? So ultimately, we are still going to grab top side. we are going to look for sells here into the buys here. All right, before we potentially grab lower. Okay, so this is the trading plan for pound yen, and we want to see how can we get involved then. This is a daily supply. All right, we go down to the lower time frame. You can actually refine them as well. You can use this area here. You can actually use maybe the 1 hour here. Valid as well. All right, and then see how prices moves towards your zone. If it's going to deliver bullishly here, this bullish move will continue to deliver bullishly until you see a H4 break. Then we start to deliver bearishly. So the truth is, traders will be looking for a 15M shift here. Nothing wrong with that. Understand that your H4 may be bullish. We have a demand here that is valid to push prices higher, right? You can catch a 15M sells into this H4 bullish and then see what prices do from here. Right, you're going to partial along the way down. Okay, you're not going to hold your trade all the way down towards this area just with a 15M shift. That's possible, but that is, you're going to partial definitely. Okay, and then what you want to do is you want to wait for this demand to fail. Okay, you are anticipating a 15M change of character here that could potentially break this H4 low, right? Not wrong. Otherwise, wait for this H4 to show you that it broke by means of a flip, by means of a break. Doesn't matter. Then trade the POI to go lower. So of course, if you got a flip here, then your POI will be here, right? And here lah. Okay. So now we have the New Zealand dollar, and I'm actually waiting for any sort of a market structure break like this. Okay, it's very clean. If prices break this area, then you can look for sells of this supply, right? Or maybe higher ones like this, right? Or even this. Okay, so basically you are selling if prices broke this low, right? Otherwise, you want to see an upside break. Okay, because yes, we are tapping into this demand, right? Has been mitigated. We can use the 50%, of course, right? We can use this, and all of a sudden, you can expect a bullish move because prices taps into a new POI that broke highs. Okay, so let's go down to the 1 hour. Almost impossible to buy off right now because there isn't anything that tells you prices wants to go higher. We want to see this getting broken, right? With this high getting broken, then yes, when you're looking at the H4 now, it tells you that, okay, prices failed to break lower. All right, we only know whether prices failed to break lower if it breaks lower, right? But this is how you actually use the lower time frames to give you a so-called signal to tell you that this demand is holding and this supply should get ran. All right, go down to the lower time frame, go down to the 1 hour, look for a market structure break like this. You're gonna see this high getting taken out. Once this high gets taken out, at least this framework over here is bullish, right? Whether or not this actually runs towards the highs doesn't matter, because when you look for a break over here, this current framework is bullish. Okay, go down to the 15. Look at this, right? We sweep the lows. We sweep the lows, and if we see a breakout like this, okay, then now this framework over here is definitely bullish, right? We sweep lows, we mitigate, we broke structure here. All right, we change the character here, sorry. And then this is a bullish framework. And then we go down to lower time frame, look for a POI here. We trade off this current movement like this. All right, and based off this framework, you are already positioning yourself to be a profitable trader because you're going to do this, aim for this 1:5. Right, even if prices doesn't run the highs, it's fine. You get 1:5. Right, and whether or not it really runs, this is where you extend your target. Okay, because you understand that there are liquidity points around all of these areas. Okay, so this will be your so-called obstacle. Okay, because prices broke this area, this should create a move down. Okay, otherwise, understand the fact that this 15M change could potentially run the highs for 1:25 or whatsoever. But in a sense, if prices decides to break down from here, okay, this supply should what? Should break lower, right? We should expect a breakdown from here if prices wants to do so, or maybe here. Okay, so if prices fail to create a lower low, then this becomes your flip zone. You want to see how prices react to this entire supply before making its move higher. So now dollar Canadian, you can see clearly we broke this area, right? And when prices broke this area, we are bearish from this point. Okay, and prices tag in the bullish leg. Can you see this is a bullish leg? Right, we even sweep liquidity, we mitigate, we broke structure towards the upside. So now temporarily we are bullish here and here. So really, I don't want to catch sells until we mitigate deeper. Okay, or if we break the lows over here, then maybe I can consider going for sells. Otherwise, understand that this framework now we are bullish here. This is a bullish leg. Okay. So you are already tapping onto a demand over here. This is a demand zone and this is a valid demand zone as well. So yes, you're kind of buying up into the supply. Okay. But everything tells you that it's bullish now. Okay, especially with this aggressive sweep that mitigates this area that broke towards the high. Okay, and now stepping into this demand zone. Let's go down to the lower time frame. So you could position yourself to be a buyer using a 15M, but clearly the 15M didn't show you anything. You want to see this high getting taken out. Alright, this is a chunk of price action inside here. Doesn't matter. This is a 4 hours high. Can you see this is a 4 hours high? Okay. So now, this is a potential area for prices to react to. And that's what you want. Because if prices breaks out, taps into this supply, fail to create a lower low, instead give you a reaction, let's say like this, and broke out. This now becomes your flip for entry, and maybe you can use this as your extreme as well. You have two POIs to look for buys, right? Go down to lower time frame, look for 15M shift to take prices higher, and this can happen beneath as well. Okay, and where are we targeting then? This over here as your liquidity point, and this over here as your liquidity point. Both of these are potential targets if the lower time frame decides to shift. Okay, so understand the fact that this red PY is a valid supply. Let me see, it's a daily inside bar. Okay, and with this bullish framework, we expect prices to run the highs to tap into this supply before potentially distributing to go lower if this bearish framework wants to continue. Can you see the story now? Right, this may not happen, but this gives me a bias. Right, why are prices delivering bullishly here? So that it can induce this area, tap into this supply, right, this inside bar, refine area, to potentially go lower, to continue this bearish framework. Because yes, highs, lows, highs, we broke. Okay, this entire move is a markup towards this inside bar to then break down to go lower, to grab this support or liquidity lows. Alright, this is how you piece the framework together. It may not happen. Alright, let me just repeat once more. It may not happen, but it gives me a bias to go for buys. Okay, so back to the daily or the H8 time frame. Right, this is bullish. Right, we take out highs. Okay, this is bullish. We are going to look for buys into this high. Tap into this to potentially go lower. So if prices don't distribute from here and it breaks high, then you are definitely bullish, because we just broke structure towards the upside again. And then we can look for buys here, or again, prices may even come back down here. Okay, or prices may even come back down here. Okay, and the context is different because now prices broke high here. This entire buy up is valid for buys, and you're going to remain a buyer until this gets broken. Okay, so prices can indeed smash through all of these POIs here just to move into this last demand to go higher. So USD CHF, we finally see some bullish move, right? We are going to grab liquidity, definitely. So now, your latest break of structure comes from here, right? We have a low, high, low. We break market structure. We pull back into demand. This liquidity still stands, and this is still the target ultimately. All of these are very ugly, right? Triangle pattern whatsoever, consolidation, sideways movement. And we're looking for the next market structure break over here. Once you see this getting taken out, then we can position ourselves to be a buyer, maybe here. Okay, you can buy here as well, because this is potentially the reaction of the supply. Can you see? This is a supply, right, by means of wicks. We tapped in, we reacted. This is a buy to sell. So prices took out this high already. So immediately on the daily time frame, this is a potential demand area for you to get involved. So do you just buy like this? Do not do that. You go down to the lower time frame on the 15M and look for what? Look for a shift in market structure again to go higher. Okay, so of course you can work with the 4 hours as well. It depends on how high this actually goes, right? If it moves higher and it starts to do this on the H4, alright, then you don't want to go down to the 15M to look for the shift. You want to look for the H4 pro trend first, then go down to the 15M to go higher. Okay, so this is the market framework. Otherwise, we expect a deeper retracement into this over here. And for sure, you're looking for a high time frame shift to be in your favor first. Understanding that yes, this is a bullish framework, right? But when prices pulls back into this area, it's bearish. You want to wait for the first sign that it goes bullish first, then go down to the lower time frame. So for the dollar yen on a weekly perspective, we broke this area. Alright, and you can see when prices retrace back into this supply, this supply should create a lower low. Can you see that it failed to do so? Right? The market structure shifted here. Once this happens, it tells you that okay, we are going bullish. This is definitely going to get ran. This is definitely the liquidity point. Okay, I wouldn't say definitely, but chances are high that we're going to run this. Okay, and potentially fail the supply. Okay, towards this area. So you want to position yourself to be a buyer. And based on the daily perspective, we broke market structure here. So if I want to be a buyer, I'm going to buy here. Okay. And if you follow the market movement, where is the low that create the high? Yep. So the truth is, you can be a buyer on this daily demand and the one beneath here. Okay, so I think this has been mitigated. Okay, so if you are using the 50% mitigation, then of course this may not, this just taps in. You can even refine it to this area here. So valid as well. So these are the two POIs for me to look for buys. And of course, I want the high time frame to shift first before moving towards this liquidity point. Okay, it depends on how high this goes. Now, if prices just grabs liquidity immediately, then you want to see a high time frame shift for sure. Right? Otherwise, we can expect a move down from here to go higher to grab this high and this liquidity point. So now for gold, we mitigated the wick here. Alright, and let's go down to lower time frame. So now let's play around with the 4 hours. We broke this structure here. So we are looking for buys potentially, right? Anywhere inside this demand. Okay, maybe this over here is a valid buy, and maybe this over here is a valid buy as well. Alright, otherwise we are going for sells. Where is the change of character? It happened here. Can you see this as a change of character on the 4 hours? So now, this is a valid sell immediately. Okay, so if prices were to pull back, I'm looking for a H4 shift, 15M chop to go sells into all of these areas. Potentially, okay, so this is the gold trade idea. We change character here on the 4 hours, and it's important. It shows that this area here now is bearish. Okay, and based on the H4 bearish model, you can look down for the 15M change of character here, the 1M change of character here. All of these are definitely valid for sells. So for cryptocurrency, again, we bought here. Okay, I hope that you guys caught this move. And we broke this high. Okay, so this is again a change. This is a minor break of structure, okay? Because the high that took out the low is here. So this is the break of market structure. Alright, if you want to see a complete bullish move, then this will be a nice structure to break. Otherwise, understand the fact that if I want to be a buyer, I'm going to buy here. Okay, and sadly, this may not hold because we failed to input a new high. Right, weak high, yes. Right, body breaks, no. So this means that demand might fail. Okay, which is going to tap into the origin over here to go higher. So if I want to be a buyer, again, if I'm looking to buy, I want to buy here ultimately and run this area over here. Alright, this is for near USDT. So for DOT, again, this is a weekly demand, right? Prices tagged in. Alright, and we failed, or I would say we haven't gone through the break of market structure yet over here, right? This is the change of character that can happen. Ultimately, we want to see a break of this level like this. Once this happens, it tells us that, okay, prices respects this demand and is ready to move forward. Okay, so if that happens, I want to position myself to be a buyer at any order block or demand that was created when it breaks this high. Okay, like this. Right, then this becomes a demand. Alright, it really depends on how prices breaks once again. Otherwise, we should expect deeper movement down. Okay, if this push fails to create a high, then this will get ran. And how do we know whether prices fails to create a high? Look for clues. Okay, if I'm a seller, I'm gonna sell here. So the truth is, if I see a distribution over here, like this is the signal that tells me potentially this is gonna get ran. Alright, we're gonna expect a deeper mitigation, potentially into this area here, before moving higher to go wherever. Alright, all of this potentially. Okay, so this is a story you want to build for yourself, and expect a retracement, expect a pullback, expect a deeper mitigation. All of this should come into your head naturally.